Hey guys, welcome back to my YouTube channel. Over the last 2 years, something shocking that has happened. India's benchmark index, the Nifty 50, has almost delivered 0% return and it's negative in terms of dollars. So, what's really going on? Is the market broken or are we missing out something bigger? So, in this video, I'll break down exactly why Nifty has been stuck. I'll cover all the major impacts that are happened, including global wars, tariffs, and all the geopolitical tensions, FII money outflows, and then interest rate cuts from RBI, and most importantly, the Nifty valuation and what will happen in next 2 years down the line. So please make sure you guys watch the video till the end. If in case you like it, please share it with your friend and subscribe to the YouTube channel, The Market Hub. So without delay, let's get into the video. Imagine this. You have invested your 10 lakh into Nifty 50 in April 2024. Fast forward 2 years to today in April 2026, your investment value and your portfolio value will remain same as 10 lakh. So if you factor in 6% inflation rate, you would have lost 12% of your purchasing power. What are the main reasons for all these things? Let's see one by one. So the first one is tariff. I need to talk about Nifty valuation as well. Maybe I'll cover that towards end of the video. If we talk about tariff, Trump imposes tariff across all the countries which caused supply chain disruption and slowdown in global trade. This impacted some of our major sectors like IT, pharma, and some of the solar export businesses, etc. Again, after some time, he came and he made a statement that he will increase the tariff from current 25% to 50% if you keep buying Russian oil. And after some time, again, it got cooled down. When there was some recovery, again he came and he started Middle East war, which made oil price volatility and then investor fear, and there was again some supply chain disruption. The war went till some 30 days, so that was also one of the main key factor why we have seen the consolidation phase in our Indian market. And then comes the economic slowdown and then imbalance in our GDP due to the inflation rate, and then again RBI came and made the interest rate changes, but still we didn't see any recovery in our market. And also our dear beloved FIIs who are foreign institutional investor pulled out massive money from India, which again made markets to struggle. And then large cap like Nifty again went under pressure. They took all the money from India and they invested in US market. So this was also one of the reason for Nifty to go down. But guys, if you see the overall sentiment for Nifty, it's bad from last 2 years, starting from 2024 to 2026. Now I'll quickly talk about the most important thing, which is the valuation and future Nifty levels. Okay, now if you take a look at Nifty, currently Nifty is at almost 24,000 level. So I'll just go back 5 years. So whatever we have discussed till now, this is a post 2025. You know that you early 2025 itself, the tariff started, and in the recent few months ago, the war started and it's cooling down. So that's why we have seen some good recovery here as well. So now let us talk about this particular phase where Nifty was at 26,000 and it fell till 22,000. Guys, whatever I am telling from this point onwards is like everything will be linked to one point to another. So please listen to this carefully so that you will understand and learn so many macro activities. So if you look at here my screen here, 26,000 the market was in 2024 September, and this fall happened purely for on the basis of market valuation. If you see this one, right after COVID, I think from 2020 onwards, I'll just go 10 years back, and if you see after post 2020 COVID, from 8,000 we have seen bull run till 26,000. It was like market itself become almost 2.5x, right? Index level. So that's the reason why our market became overvalued. I will just show you the P levels as well. This is a screener, maybe you guys also can explore this. This is one of the very beautiful site for all the stock related information. If you see the P ratio of Nifty on September 2024, this was 24.4, which is highly overvalued when you compare it with the median PE. So that's the reason why we have seen kind of a short fall. This fall was around some 18 to 19%. This is purely because of valuation. But currently, if you see, the Nifty PE is 21, which is below this median PE. And also I wanted to mention one more thing. As I mentioned, I will be telling you that FII data as well, right? So FII data was also one of the major factor why we have seen market fall in 2024 and even now. uh, if you see here in the 2023 itself, they have started pulling out their money from our the Indian markets. 2023 they are the active sellers. They have sold around 5 lakh crores. In 2024 I think this was 10 lakh crore. I think if you just go back, this was the highest number in last 15 to 20 years. And then in 2025, in 2026, like if you see the recent years, they are like keep selling our market in from 2023 onwards. So I have mentioned one more thing. Now let's connect this as well. If you see now currently market is at undervalued, it is below median PE. Why FIIs are not coming back? If you see the latest data in 2026 also, they are active sellers. If you see today 29, they are active sellers. Why this is happening though our market is undervalued? For that, the main reason is this particular chart, which is US dollar and Indian rupee. Our rupee got depreciated more than 5 to 6%, around near to 10%. So if you take a look at this chart, our Indian rupee was at 85 rupees in April 2025, and today if you see, this is almost near to 95. So that's the reason why they are still on hold. They are still not coming back. Along with this, there was one more key factor as well. Still we are paying that LTCG tax. uh, we have expected some reduction in this budget, but again it didn't happen well. We have seen some again increase in STT tax and all those stuff. That's why again market fall happened on that particular budget day. That was also one of the reason to market and also for FIIs to not come back. So this is overall high level, guys. Why FIIs are not coming back? But I'll tell you the high level data point that what will happen in the future days, right? That is what is important. Maybe I'll just go back to this chart itself. If you see 5 years data, this is how it look like. This fall you got to know why it happened, and this was also you are clear about all the tax from the US, which is tariff, and then the war related things. Maybe I'll just expand this. Now listen this carefully. I will talk about the future Nifty levels. So this is the point where we are having Nifty as support, which is 21,800. I think it didn't even reach that point during the US and Iran war itself. We have seen lot of volatility in the oil prices. Crude went till 120 $130, but still we didn't reach this point, which was happened in 2025 February, and this was around we still didn't reach 21,800 level. This is the strong support, guys. I don't think we will reach this point until and unless we'll get one more COVID or any such kind of situation, which I think we don't. So by considering that this is the lowest point, this is the time where you guys need to invest more. You need to start accumulating units for mutual funds or direct stocks or whatever. I don't think you'll get these kind of situations ever. I'll also show one more data point. Take a look at this. Even though our Nifty has given 0% return in last 2 years, the corporate profit has grown in the scale of 12 to 15% across all the industries. At least to value this, Nifty has to grow in next couple of years. We have seen GDP, nominal GDP growth inconsistency due to all this global uncertainty. I think that will all pick it up in upcoming months. So for now, if you guys are doing SIP or lump sum, just don't stop it. If you have money, just keep pushing it, keep dumping into the market. If you see next 5-10% rally, then you'll just sitting with the cash, then you'll miss that rally. So if market go down also, then you can add and you can average it further. If you take a look here, historical sideway market didn't move from 2015 to 2016. In those 2 years after that, we have seen a rally. 2020 it was a COVID, we didn't see any moment. It was down around 40 to 45%. Again we have seen a rally. Now currently we are in the same situation. We haven't seen any kind of returns from last 2 years. Going forward, I feel there will be a positive in our market. After that, FIS will obviously come back. I think tax part government need to take a look into it. I think in upcoming years, if they at least reduce or completely take out that LTCG part, there will be nothing wrong in our market. India is a strong economy, growing economy. I think in the long term, for sure, we will be seeing good returns in our market. Based on my analysis, Nifty will cross the 26 mark and it will create one more high, which I feel might be 28,000 level by mid of FY27 or towards end of FY27. If in case you guys don't want to miss this rally, please start investing and keep 3 to 5 years of time horizon so that you will not regret in the future point of time. For sure the next 2 years will be not similar to FY24 and FY25. Also specially mentioning, this is newly started YouTube channel. If you in case you guys like the video, please show some love by subscribing to my channel and also share it with your friends. Also comment your thoughts on this video as well as the type of content you guys wanna see in the future. With that, I'll conclude this video. Thanks for watching. See you all in the next one.